I have found a trading tool that has been absolutely instrumental to my success lately in trading, and I am super pumped to make this video because this tool is like the holy grail of data that the stock market or futures market provides. It gives you all the insights you need, everything that you want to know and need to know about the stock market or the futures market, all the data points in order for you to make decisions based on your tradings intraday or heck, even longer term. So I'm going to jump into this video. We're going to share my screen here and I'm going to go over a tool called Edgeful. Edgeful has been, it's amazing. I actually love this tool. I'm going to go over what I have been using. Now you can use this in many different ways. You can have several different strategies. I'm not going to go over all of those. I'm not going to deep dive into that. But I am going to go over a few of them, a few of these data points that I use personally that have helped me tremendously in my trading. So what you're looking at, they have a bunch of different tickers up here that are just scrolling across the screen. Really cool. You can go into stocks and you can choose basically any stock, ETF, whatever you want to go in. If you want to search up Tesla, bang, bang, you can go on Tesla and get a whole bunch of data points on Tesla, choose your date range. They have Forex and they also have futures. For this video, since I trade futures, I'm a futures day trader, I'm going to go over the futures side of things. But obviously, you play around with this tool, you can choose whatever you want. So I'm going to go in here and then I chose futures. I want to look at gap fills. All right, so let's go into price action on report type. We have gap fill already selected. I'm going to choose the NASDAQ market, the E-mini NASDAQ market for the New York session. And for date range, I'm just going to say, I'm going to trail it by a year. Just that way I get all the data. I get a good sample size on data. You can see that this tool is giving us some very key information on gap fills. It's telling us basically, if we're looking at the NASDAQ New York session on a year time frame, that gaps get filled, gap ups get filled 63% of the time, where gap downs get filled 57% of the time. So if we go into this gap up here, what that means is the previous day's closing price and the next day's opening price has a gap between it. Okay. And so we know that on gap ups that it gets filled 63% of the time, meaning it'll come back down, fill this gap. And then same thing on gap downs, right? We can see that the previous day's close and the next day's open has a gap. And so that 57% of the time, this will get filled. Now, gaps do not always have to get filled. I know a lot of people on the internet, they'll say, oh, gaps always get filled. Well, while mainly and a majority of the time they might get filled, yes, but they do not have to get filled. All right, they don't have to. But this is telling us data points that, okay, 63% of the time a gap up might get filled. And so we can anticipate it, but we're not going to try to predict it, right? We don't want to predict that the gap's going to get filled. But based off this data, that 63% of the time a gap up can get filled before it continues the trend or just completely reverses, right? There's a lot of times what you'll see is gaps will get filled, like a gap up, get a huge gap up, and then it'll fill the gap and then go back into the trend that it was going to just to fill in that gap. But then it could also just fill the gap, but then keep going, right? So don't try to make trading decisions based off this. Use this just for total clarity of what the market has done and what the data is presented. You can anticipate something like that happening, but it does not have to. So be sure not to make trading decisions based off that, okay? But use this data to give you clarity on what the market has done and what it's previously done and what it most likely will do, right? So this is how I use the gap fill. Let's go into volume. And let's look at volume and range by weekday. All right. And so I'm going to keep it on the NASDAQ for the New York session and 1 year. Sweet. Okay. So this is giving me what the overall volume is and the average volume and the average ranges on the day each day. So Monday through Friday. And so looking at this white line here, that's giving me my range. And these blue boxes here are giving me my volume. And so on Mondays, I can see that volume's typically lower and we typically have a smaller range. And so what does that tell me for Mondays? That I'm not really looking for home run trades. I'm not. I'm going to look for quick scalps because we don't typically get big moves on Mondays. It's usually pretty choppy, especially when it's a non-news event. There's no news on Mondays. It just kind of just chops around. You don't get big volatile moves. If that changes throughout the week, right? So we get into Tuesday. All right. So we usually have a little more volume on Tuesday, a little bit wider of a range. And a lot of times we have more news on Tuesdays than we do Mondays. So that could be a case as a reason why. But I can see that I can look for a little bit bigger moves on Tuesday. But then we get into Wednesday and Thursday and things spice up a little bit. We usually get more volume. We have a larger range. All right. So now I can start to look at larger moves. I can look at more of the home run trades when I can be aggressive on trading versus being conservative, taking those quick scalps on these higher volume and higher range days. I can get a little more aggressive on my trading. And so that's what I really like about this data point. Same thing on Thursday. We have a higher range on Thursday than Wednesday, but pretty much equal volume, I would say. So again, I can trade aggressively. I can look for those larger home run trades. Fridays can be a little bit tricky, I would say. We do have equal volume pretty much and a decent range, but that I always see that dies out later in the day on Fridays. You get to that like power hour time frame, seems like everybody's taking an early weekend and that volume kind of dies out, but you can see we do get pretty much equal volume and a decent range, say for the morning session, probably on the NASDAQ. And so you can use this data to be like, I know when to be conservative. I know when to be aggressive. And on Mondays, I'm going to be conservative. And then I'm going to get a little more aggressive throughout the week so we get those larger swings. And so let's go into session volume by weekday. Just let's hear. Okay, cool. So this is giving me all the markets here, though I'm mainly paying attention to like the New York session, but this is giving me Tokyo and London session. But if you look at volume for the New York session, so this light blue, right, you can see about in the 400,000 range. We get a little more volume coming in the Tuesday, definitely more volume Wednesday, a little bit less than Wednesday on Thursday, but we still up there. But Wednesday through Friday, we typically have the most volume. And so that's looking at a year time frame and seeing what the average volume is, right? So this is a huge data point that I like to see. Now, one of my strategies, I will say, is initial balance failed auctions, right? Essentially what that is, first hour of the day, it makes the initial balance. If we get a breakout above the initial balance and we fail it and come back below, then I'm looking for a short because it's a high probability trade. Then vice versa, on the lower end initial balance, we can break out below the initial balance and then fail it and then come back up, and I can look for longs targeting the other end of the range. So this also gives me the initial balance. If I go back into price action and then scroll down, there, boom. Initial balance breakout. And so this pie chart is telling me how often we have a single break, a double break, or a no break, right? And if I'm looking at the NASDAQ on the New York session with a trailing year time frame, you can see that 77% of the time we have a single breakout of the initial balance, whether that's to the upside or downside, whatever it may be. Then 20% we have a double break, meaning we break to the upside or we come back down and then break to the downside. And then 4% of the time is no breaks. We're kind of just chopping in a range and we're in the middle, not really doing much. But 77% of the time we can see that we have a single break of the initial balance. And so we can anticipate that when we have an initial balance set on the day after the first hour, and we see momentum really picking up through either side, whether it's the long side or downside, we can anticipate a break in the initial balance given how strong the momentum is, the buying or selling pressure is, right? And so we can anticipate that. And then that's where my strategy comes in on whether or not we can maintain those aggressive extremes, or we're going to fail it and come back into the range where I can take a short or long, whichever it may be on either end of the trend or the initial balance. And so these are really good data points. And this is just a sample size. Like what I went over in this video is just a sample size, right? You can go to price action here and you click on this. You have all of these to choose from: FOMC performance, intraday timing, average consecutive bars, intraday range, opening stats, inside bars, outside days. You have all of this information here that you can go in and see all of these different data points. And guys, this tool is worth having in your arsenal when you are trading because it just gives you clarity, right? You don't necessarily have to make decisions, and you may not make decisions based off of this, but it gives you clarity on data and how the market performs on certain areas, right? And so I highly recommend you check out this tool. If you haven't already, check it out. There's going to be a link down below for you to click and go into Edgeful and check it out. So click that link down below. Go check it out. Try it in your trading. See if it works for you. It doesn't hurt to add something to your arsenal that gives you very big and large key data points in your trading. So check it out. Let me know how it goes for you. And guys, if you like this kind of content, be sure to smash the like button down below. Subscribe to the YouTube channel, get more daily content, and I will see you in the next video. Cheers.